This is Real Talk Real Estate with the Hill International Group. Realtors Tony Scott, Todd Dion, Janae Merriweather, Rod Maestas, and broker associate Jason Hill.
Hello, friends. Welcome back to Real Talk Real Estate with the Hill International Group. So glad to have you back on this episode. Today we have a guest with us, Kyle Richardson with Lend Friend Home Loans. He's going to help us understand a very important topic, 2-1 buy downs, what that means for you as a buyer. And we're going to get right into this with our guest. And I think Jason's got a question lined up.
No doubt. Thanks, Todd. Reality is we are wrapping up quite an eventful year, at least in the real estate market, of just incredible changes. A buyer's frenzy at the beginning of the year. Inventory was low. Buyers were just buying anything that wasn't nailed down. They all wanted to take advantage of low interest rates coming out of post-pandemic times. And then the feds came in and started raising the interest rate. Buyers began to get cold feet because of what they wanted to buy. Interest rate was too high. It was just too much money getting in. And now we have programs out there to kind of help people who are legitimately out there just trying to get a home in a market that's cooled down a little bit because of the soaring interest rates, I can say. And these programs, they're buy downs, right? And we've heard of ARMs, a 2-1 ARM, 5-1 ARM, 7-1 ARM, all those sorts of things. But now we have these 2-1 buy downs. I believe there's a 3-2-1 out there as well. So Kyle is here to kind of give us an idea of what that means, especially for our buyer clients out there and our sellers. Kyle, we've heard of ARMs before, but just can you give us a quick overview of this 2-1 buy down to just kind of situate us so we can really start driving into finding out if a 2-1 buy down could be good for some of our buyers and sellers out there listening.
Yeah, so a 2-1 buy down or a 1-0 buy down, and a really cool tool that we've been using for probably the last 3 months. What's really nice about a 2-1 buy down is essentially what it's going to do is it's going to take your interest rate for the first year down 2%. Second year, it will take it down 1%. And then once year 3 starts, you'll fully index to, whatever your qualified rate was. So the whole concept of a 2-1 buy down, it's been around before, and it usually rears its head when we have raising interest rate environment. And so it's basically buying you a 2-year window to refinance, right? So if the goal is, as anticipated this time next year, interest rates are back to the mid to high 4s, you'd be looking to refinance, but we're going to subsidize the rate down for at least a 2-year period, right? If your qualifying rate right now is 6.25 for the first year, it'll be 4.25. Year 2 will be 5.25, and then once year 2 is over, it will fully index to the full 6.25.
Now they have courses out there for real estate agents just to give them an overview of what this is and how they can utilize that to help their clients. Rod, there's some pretty interesting information you learned that is part of this particular program.
Right. So I took notes real quick. It's just a short list. This is what I had heard from my training. It's a fixed rate loan, FHA, VA, conventional, USDA can be used. No ARMs can be used, and no DPAs can be used at all. Down payment agreement is required, and it needs to be signed by the seller and the buyer. Buyer has to qualify for undiscounted rate, not the buy down rate. So that's going to help a lot of people out. Buyer cannot pay for this. It has to be paid by the seller, the lender, or the agent.
Yep.
And you had already gone through this, but 2% first year is the buy down. Second year is 1%. And then the cost is much less for sellers than an actual permanent buy down of, say, 1% or whatever, because that's really expensive. Typically, the $9K range is how much the 2-1 buy down is going to cost on like a $400,000 home. Also, what's nice too is that if you refinance before all of this money is used, the buyer gets the unused portion back.
Kyle, he laid it out kind of in statement form and note. Who pays for this? It says the sellers pay what and how much does it cost?
Yeah, good question. So I actually ran some parameters. Everything was spot on in that, right? And so I'll kind of give some of the highlights that we really like. Right now, average loan amount in the Austin area that we're seeing is approximately $400,000. So if your par rate or uncounted rate is 6.25, and we take you down 4.25 for your first year, it'll save a buyer $500 the first year per payment, each payment. The second year, your payment will be a $250 savings. And the best part about it, and where we really like this, is you were right? A $400,000 loan amount, the buy down is approximately $9,000, right? And so if you were to only take $9,000 off the sales price to give back to your buyer, the payment realistically is only going to go down about $40 or $50. And then also too, if they were to refinance within the first year, all that money is gone within the discount. Whereas with the 2-1 buy down, any money that's left over whenever they refinance goes towards a principal reduction. So it comes off of what they actually owe when they refinance.
So when you say money left over, can you explain what money left over and how that's determined?
So let's say you do a 2-1 buy down and you refinance at the end of year one. You'll still have about $2,500 to $3,000 left that they're using to artificially buy your rate down in year two. And so a lot of people are like, oh, am I leaving money on the table? And the answer is no. That $9,000 that it costs to buy down, just imagine that the mortgage company were to set it aside, and for the first year they pull $450 or $500 out of that every time you make a payment. Well, if you refinance anytime before the 2-year period, there's going to be money left over essentially in that account that is subsidizing your mortgage payment. So whenever you go to refinance, or if you were just to sell after a year, any of that money that's left in there is taken off of what you actually bank on your final payoff.
Couple questions and clarifications. Yep. So is this program new?
No.
As a response to this roller coaster ride of interest rate hikes during this past year?
So this program isn't new. This program's been around. I would say the last time we were really using this was in 2018 when rates started to rise, depression in the mortgage industry. So it's not a new product, but it's a product that, when you're at 2.5 on an interest rate, everybody's just taking it, right? They're not going to go lower, right? The thought of doing a 2-1 buy down on that and only paying 0.5% in interest is just not feasible. This program really pops up in today's market when you're having such, I would say, drastic increases in mortgage rates. And it's a tool that helps subsidize buyers and have affordability to go out and buy a house while they wait for the rates to relax.
When does this not become the best strategy for a buyer? Like, is there a particular price point? Is there something that you as a lender would just say, hold on now, I just don't see this being the best way forward. So
the only time that we are basically not doing a 2-1 buy down is if you have a buyer who is 100% risk averse, right? They're like, you know what? I'd rather just take that money and just buy my rate down for the fixed 30 years. I had a buyer like that last week that, we showed him all the data, all this stuff, but he's like, well, what if rates don't come down and it fully indexes back to 6.25, but I could have bought down to 5.75. And so that was their choice. They were totally risk adverse. Outside of that, it's a great program. I mean, we suggest it to everybody. Right now we're in a market where I saw the study that homes are going for 93% of what the list price is. So there's kind of a 7% buffer. So if we can come in and help a borrower subsidize that payment for the first 2 years while we wait for the refi window, it's great, right? And also on the seller side too. So you figure it's about 2.75% off of your sales price from a seller standpoint to help that buyer subsidize that payment.
So I just want to caveat back to something that you said a minute ago about for the first year, you could save about $500 a month on your mortgage payment. And I think that's where, like, one of the reasons we wanted to bring you into this as we're thinking about the buyers and the people out there that are looking, they're on the fence. They think that I think most buyers are just not aware of all of these types of opportunities. And they're sitting there thinking, well, if I get in the market now, 6.25%, and they're doing this mortgage calculator online or something, and they're saying, wow, I can't afford that right now. But with the 2-1 buy down, $500 a month is a big difference in monthly payment. So all buyers, those of you on the fence, just listen to this. There are solutions for where you're at and where you're positioned right now. As long as you can qualify for the current rate, you can get that rate bought down to where you make that home more affordable. Am I hearing you correctly by what you're saying?
Well, right now is the best time to buy to get a deal, right? I mean, you guys all know that last spring, everything was multiple offers, well over ask price. Buy now, you secure a great deal, and then we just wait for the refi window, right? Rates go up, rates go down. It's just the business.
Kyle, is there a 3-2-1 program also out there? And the other question is, we always hear about these ARMs. What's the difference between these buy down programs and traditional ARMs?
So there is a 3-2-1 buy down out there. It's basically 3% lower the first year, 2% lower second year, 1% lower third year, and it'll fully index. The thing with that is it does come at a much, I would say, steeper price. And we're about to roll ours out, I think, next week. And so we just have to be careful when we do this. Like if you've got a conventional buyer that's doing less than 10% down, right? You don't want to exceed interested party contribution. So it's not necessarily for every buyer that's out there. We'll assess that. So if you do a 3-year ARM, a 5-year ARM, or 7-year ARM, that portion is what's going to be fixed on the interest rate. And after that, you basically go to market, right? So if interest rates are up after your years, 5 years, or 7 years, your rate will go up. But if rates come down, right, then your rate will come down.
What do you suggest between the two, and how would you figure that out?
So, ARMs right now traditionally have been a slightly lower interest rate than a 30-year fixed. They're not 2% lower, right, for like a first year, not one fully lower on a second year. A 2-1 buy down is definitely the best option. Unless you're that person that is totally risk adverse, going to be here 5 years. Maybe a 7-1 ARM gets you a slightly better interest rate. It's fixed over a period of time, but you have an exit plan in place.
Just to clarify as much as possible for our listeners, I'm just going to use the 2-1 buy down as an example. Earlier, Rod had mentioned that either the seller or the agent has to pay for this. Do lenders as well pay for this particular program? Is it possible that the seller, lender, or agent could pay for it?
Yeah, those are all possibilities. The main caveat to that is that the borrower cannot pay for it. And so the reason a borrower really can't pay for it is because it's their own interest anyways. If you were a buyer trying to pay for it yourself, it wouldn't really make sense for you to pay $9,000 up front to lower your payment when you could have just taken that $9,000, set it aside, and subsidized your own payment in increment.
It's not an incentive at that point because you're using your own money. I'm glad, Janae, you asked that question. I think that provides some clarity to our listeners who are in the position of being a buyer right now, because that's the question I have run into where there's like, why would I do this? Why would I spend, like you just said, Kyle, why would I spend $9,000 when I can just keep that money and use it for other things or use it to subsidize my payment myself?
Correct.
So thanks for that clarification. That's very helpful.
For sellers, Kyle, how much is the difference between 2-1 buy down versus a fully permanent buy down? How much money is the seller saving?
Yeah, so it really depends on negotiation. Like if you were going to take a regular rate of 6.25 and do a 2-1 buy down, right, it's going to cost the seller about 2 points. But if you were going to take a seller and say, well, I want to permanently buy down to the 4.25, I mean, those discount points would be off the chart. I mean, you may be talking 15 to 20 discount points from a seller. I mean, you would exceed interest party contributions well before you would even come close to that number. And that's why the 2-1 buy down is such a unique program, is because it allows you to get down to the rate for a certain amount of time, whereas you really couldn't get down to the rate in a normal environment.
So just for the math, let's say I have a $400,000 home, the seller is selling. It's going to cost $9,000 to do this 2-1 buy down. Yep. How much would it cost to get a permanent buy down?
Well, it depends on what you're trying to buy your rate down to.
Like 1%.
You want to buy your whole rate, say from 6.25 down to 5.25. So a 2-1 buy down would be, I would say, $9,000. You'd probably be looking closer to, $35,000, $40,000 to buy.
That's all I need to know.
That's a huge difference.
It's a big difference.
Usually for 1% of your loan amount, you can usually, assuming you just want to do a straight buy down, you can usually lower your interest rate by about 0.25%.
This is what I'm hearing, and this is what I want. If you're listening right now and you're just like, you're still maybe just a little bit overwhelmed with all this information, as a buyer, I just want you to be aware, first of all, that there are solutions for you. Second of all, that your neighbor, your friend, the people you probably sit around with coffee and drink coffee and have these conversations, unless they're in the business, they're not going to be able to give you accurate, precise information that is specific to your situation. And so this is so important for buyers to understand. Get a real estate professional, like someone from the Hill International Group, to have a conversation with about real estate in the real estate market. And also, you won't know what you can do until you talk to someone, a lender like Kyle at Team Lend Friend. You will not know what to do or what you're capable of doing until you talk with someone like that about the specifics. You need a professional to give you a professional response and a professional answer. And I just felt like I needed to mention that because there's so much gossip. There's so much, God, I hate this word, misinformation from the news media. This doom and gloom. And when there are probably solutions for you as a buyer to get into the market, to engage it, to get your home and not feel like you have to wait for 3 years for things to improve.
And Todd, on that note, I'd like to add to that. And because of that, with the state of the market, there's so much more inventory with a solution like this. I mean, they would have so much more of an opportunity to get into a home.
It definitely becomes a win-win for both buyers and sellers, especially in a market like this.
Absolutely.
So Kyle, we do appreciate you taking the time to be with us today to educate us as realtors. Once again, it never hurts us to hear this information again, and especially educate the audience that is listening. We appreciate it. How can people find you? How can people contact you? Would you just give us shameless self-promotion?
Okay. DifferentHomeLoans.com. That's our main website, right? And you can find me through the directory. The easiest way to get a hold of us is just go to the website. All my contact information is there, phone, email, anything that you would need.
Great. Kyle, thank you so much for being with us today. And everyone, if in case you didn't get that, you can find them at Friend Home Loans, their website. You can find Kyle there, other agents as well, lenders as well to work with from Friend Home Loans. Check them out, see if they have the solution for you, and let's all work together to find success for some of these buyers that are on the fence. That's what we're here for. Kyle, thanks so much for joining us today.
Thanks, guys, so much.
Folks, having that sort of information and programs that are out there, I mean, if you don't know about it, then you're going to you're going to have a knee-jerk reaction. You're going to see this high mortgage price, and you're thinking, there's no way I can pay 7%. I can't do this. We're just going to wait. When there's just possibilities out there. I mean, Todd, you brought it up. I think it's just great to know. I mean, that information needs to be put out there.
Certainly. I mean, buyers, people, they are not fully aware of the solutions that are available to them. And that's why we have this podcast. We want to educate. We want to enlighten people. We want to keep them abreast of what's going on. Obviously, they see the economy. They see different parts of it, but like we continue to see in market reports in this area, this is going to continue to be a strong market because of the job market. It's slowed down, of course, but my goodness, if you were looking for a house a year ago, couldn't find anything, you have your choice now. There's choices now. You're not going to be forced to settle for something. And of course, I say that with the caveat as everything is dependent upon your financial situation, but you need a lender, right, guys? You need a lender to give you the best picture of that so that we can work with you, keep you in that window of financial ability, I guess you would say, to purchase. Make sure we're seeking out the right house for you and the right budget based on the right budget that the lender provides us, and then we can find success. Simple as that. Now, with that said, we're going to close out this episode of Real Talk Real Estate with the group here, and we have some updates. Each person has brought a few updates, and this is new construction, something that is on the peripheral, I think, of a lot of buyers, but some things we wanted to mention to you as well of new construction that we're aware of that are offering some really good incentives. And so we're just going to go down the list here. Jason, I'm going to start with you. What did you find in your area?
GFO homes and Paysetter homes all have some deep discounts, and not only in the price of the base price of the homes, but also in upgrades as well as money to buy down interest rates. So, I mean, it's almost a trifecta of possibilities for buyers with those two particular new construction builders. GFO homes and Paysetter homes. Those are my two.
And we want to make sure that if you're hearing that, you want representation going into new construction. They'll tell you, you don't need a realtor to buy from us. But if you get in that situation, that is an awful situation to be in without any type of representation between you, the salesperson, the construction manager. You need someone who has experience in dealing with new construction. And the great thing is you get a realtor and this builder pays the realtor. You don't pay the realtor. So that's something to keep in mind. There's no reason you shouldn't have representation by one of us at the Hill International Group for your purchase.
A quick disclaimer, Hill International Group or none of the agents here, we are not connected to any of these builders that we're suggesting to you. We're just providing you information because we get bombarded with all sorts of information from builders about their incentives and so forth. So we're really just passing them on to you, no strings attached. And again, we are not attached whatsoever to any of these builders. This is pure information for you guys, our listeners.
Yeah. So Rod, what do you got? What did you come across?
I've got two communities that I wanted to mention. Starlight has several communities, and they're offering $17K down off the price of the home. That's either towards closing costs or that's towards a buy down, like we were just talking about. And then Perry is offering 4.99% interest permanent. And that's kind of a special thing too, as well. So,
so that's the more expensive 30-year buy down.
Right.
Was it 30 year or 15 year?
That's 30, I believe.
Wow.
So
that's huge.
Yeah, I mean, the concessions are out there. It's a perfect time to buy. What I'm afraid is going to happen is that everybody's kind of waiting to see what everybody else does. And then when everybody else does the same thing, they're all going to do the same thing. And then everybody's going to be bidding against each other. And it's going to be a whole big cycle back to last year. So smart
my favorite reference
are contrarian investors, right? Like the best time to buy Apple stock is when it's in the tank. Most investors, they go, hey, everybody's buying Google. It's crazy. We're going to make all kinds of money. So everybody buys Google at the top end. And then Google starts to tank and everybody goes, oh my God, get out of Google right now. Or are you going to lose all your money? So everybody jumps off of Google and they make that loss permanent. So they're buying high and selling low. Right now, you want to go get in while everybody else is not doing it. And you have the insider information that we're giving you right now about how you can do that.
When there's pallets of toilet paper available at Costco, nobody wants toilet paper. But when there's only one pallet of toilet paper, everybody's fighting over the flipping toilet paper. I mean, don't be that person. Buy when there's pallets of toilet paper available, not when there's none, and you're going to get the best price. And we can just correlate that straight to real estate. I think you can do that yourself.
One other thing I'd like to mention too, I don't know if anybody out there watched this, but last night on 60 Minutes, they interviewed Janet Yellen, the Secretary of State. Extremely smart little lady. She's like 4 feet tall, but she's got a PhD in economics from Yale. She's got an IQ that's off the charts. We're lucky that she's running the helm, and she's saying there's not going to be a recession. So she's saying the economy's too strong, the job market's too strong. And I think that what Todd was talking about, if it bleeds, it leads. Everybody is trying to scare the heck out of all their listeners so they'll tune in. But we may be in for a softer landing than we're all predicting. So that's something to think about.
And you're right. I was a news anchor and TV journalist for 25 plus years. And it's not necessarily the industry that does that. It's just ratings, right? Everyone's on those television broadcasts. It's all about ratings, and people want to see the burning. They want to see the fire. They want to see the craziness. So that's what's reported. But there's a lot of good out there happening, a lot of possibilities out there happening. So yeah, just don't get caught up in that misery storm when there's possibilities for you out here.
Yeah, don't get paralyzed. Don't get paralyzed right now until you talk to someone or even talk to professionals before you paralyze yourself with fear. Janae, you had a couple of new construction builders you ran across. Can you tell us about what you found?
Janae is our in-house new construction expert. Come on, Janae. I've got my notes out. Too.
Really, stop it, Jason. Listen, most of these builders are offering incentives right now. I've spoke to many. I would say that a couple in Hutto. Hutto's a great hub right now for new construction. All of the real estate's expensive, but on the more affordable side, I feel Hutto has a lot to offer when it comes to new builds and more reasonable pricing. So, of course, I chose 2 builders in Hutto. And of course, you can contact me for these 2 builders, but both are doing buy downs. One's doing a 2-1 buy down, and the other, ironically, is doing a 3-2-1 buy down. Both of these builders, I should say, these incentives are tied to their inventory homes. These are homes that they are building or are built and are on the ground, meaning that you won't have the opportunity to go to design center to select your own selections for the homes. But again, these homes have designers who have went through the process and put these homes together, meaning that they're all beautifully done. So on that note, these incentives are tied to their inventory homes. One builder told me that everything is negotiable. So isn't that interesting? The price of the home.
That's a big difference than a year ago.
Mm-hmm.
Big difference than a year ago.
Yes, absolutely.
You couldn't even get a call back.
Telephone. Right.
Yeah. They wouldn't even answer their calls a year ago.
No.
Now they're begging people to come buy their houses.
Correct. So she said everything is negotiable and they're offering a 2-1 buy down. Definitely something to consider. So I would say that both of my builders are in Hutto, but there are other builders who are also not necessarily they are all offering buy downs with their preferred lenders, the majority of them, but a lot are willing to, if you are under contract already, or if you know of friends or family that are under contract already, builders are willing to renegotiate that original contract price from months ago. And that's something to consider, even from just an information standpoint. If, we have listeners out there who have family members that are under contract that they know are buying, this would be great information to pass along to them as well, to have
share the podcast, share this episode.
And Janae has left the name of her builders unknown. So definitely give her a call like that.
And I'm doing the same thing.
Oh my goodness!
You're gonna have to reach out to me.
Rod, we're so transparent, you and I.
Oh man, I'm sorry.
Yeah.
So
it's all right,
I found I found a couple. So one's in Elgin, so that's more rural living. If you're looking for that, get out of the city, or you don't mind a 30-minute drive into Austin, then this might be a good fit for you. And this particular builder is depending on the floor plan, and that is an inventory home, offering up to $100,000 in price reductions. So that tells you a big change in the market. Or you can do a 30-year fixed rate to 4.99%. So that's huge. And that's on an FHA loan, so only a 3.5% down. There's one incentive for you. If that's something that fits you, reach out to me. And then another one was a luxury builder. They are providing up to $30,000 incentives to use your way. And that's all they say. Use it your way. So that's a nice incentive for those who maybe not be as concerned about the overall price because you have really high income, but there's a deal out there for you too on the luxury end. And there's others. We're just scratching the surface by sharing this with you today, but we want you to be aware as a buyer, there are opportunities. We want you to be aware that as the Hill International Group, which is made up of Jason, Rod, Janae, Tony, who's not with us today, myself, Todd, you could find us all on higroupatx.com or fathomrealtyatx.com. You can see the team. You can look the areas we serve. Some of us cover similar areas. So just reach out to us. If any of these locations stand out to you, reach out to the particular person that has mentioned it. Hutto, Janae, Elgin area, Todd, Rod's down at Buda, and Kyle, same thing with Tony and Jason's Round Rock and around that area as well. So when we all overlap a little bit. So you can reach out to any of us. We'll be glad to assist you with finding your next home, connecting you with lenders like Kyle who are knowledgeable and get you set up to find success in your home purchase. So thanks everyone for joining us today with Real Talk Real Estate. We'll catch you on the next episode.